Welcome back, everybody. Been a very long time. Posting on YouTube today because it's going to be a slightly longer video. So I just want people have more people access to it. I'm going to talk a lot of. Oh, I'm on Forex. That's a good start. I did record this video. I didn't press record. Typical me. But yeah, I've been sending updates during, in the Telegram for anyone here on YouTube. Concentrating more on the Telegram. Uh, you know, Price action is what everyone's looking at the moment, and we're just looking for a good community. So feel free to join if you think you want to be part of that. But with that being said, let's get into the charts because that's what's very interesting with Bitcoin doing something that is very interesting here. So let's start off on the daily. And I've been sending messages through in the Telegram, and I've been saying like, don't be sad and expect a bear market, expect downwards prices. And I really wanted people to make plans. It's you know, prepare for the best and plan for the worst, right? So that's the saying, something like that, or whatever. But anyhow, you know, uh, that's basically what I wanted, people to have and just expect downside moves because, the first thing that I've been posting, you guys can check whoever's in the Telegram, my previous videos, and it's very important, is I hate saying I told you so. I'm not gonna say it because there's no such thing as I told you so. You can only educate whether people take that information or comprehend it. Some people can't comprehend it, so there's no such thing in my opinion. But what I was saying is that Bitcoin rejected at the top of the range. And remember when I was saying, and a lot of you who watch my videos can remember when I trade Forex, when Bitcoin drives back into a range, there's an 80% chance of filling that range and a 70% chance, 75, sorry, percent chance of breaking that range. Now, those were figures based on Forex, right? And people were all expecting here price to move up to that 45K, right? And that 45K never happened because we got rejected at the top of the range. You're not breaking out. There's clear resistance here, 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 here. You can't expect that move up. So we got the 80% chance, and here's your 75% chance of breaking through, and that's what's happened. Now, that being said, what is this? This is the break of structure after a range. So here's your range highs, here's your range lows. Pretty simple on a clean chart here. Range highs and range lows. Your range highs are up here. Your range lows are down here. I mean, your range highs are here, your range lows are here. That's your breakout candle. Now, this should technically be like this. So here's your breakout candle, and a breakout of a range is simply continuation. And similar to what happened here, if you look at this whole thing being your higher low right here. Here's your range from here to here. That's the top of the range. That's your bottom. That's your higher. Your can't speak today, guys. I've recorded this video 3 times actually. So you had this upwards trend, right? This is the first time we put in Bitcoin's history uh, on this bull run. Sorry, not in history, but on this bull run, our current bull run, a daily lower low, right? We've always had higher low, higher low, higher low, higher low, and so on, right? You can back that higher low, higher low, higher low. All you have to do is buy the daily high low. Here's the first time we put in a lower low, and then that anticipated this move, but the only reason everyone neglected this is because look how strong the buying pressure was. And at that time, when you were looking at the charts like this, it looked like a range, right? This is no one's going to expect this as a breakout. People were calling this the macro low right down here at 45, and they were saying, "Oh, we're in a range," which is completely fine, right? And that's how people get caught out, and that's the whole point of this market to catch you out. That this was the higher low, and that was your breakdown. Now we're in the range. Here's your breakout of the range. So I do expect continuation down. Now, when we do break down, we look at lower time frames in a minute. I do expect us to come down initially to about this 28.6 area and probably maybe a stray wick around 27, see how nasty it gets. But yeah, basically you can see how those wicks are accumulated there. Now, after we bounce, seeing how long that bounce plays out, I do expect Bitcoin, if it does want to push through to 24,000. Now, that 24,000 level is very, very interesting, and I think this is an opportunity here, and it's where I want Bitcoin to put in a major base on a macro scale, on a macro point of view. I'm going to go over 2 scenarios here. This will be a little bit of a longer video. So now, if Bitcoin was to break below this area here, this is where, yeah, see people having sympathy for me for not pressing record, but that's all good. So if Bitcoin comes down here, I think it could put a macro base. Why? This is a nice breaking area. This is initially a nice accumulation area, and it's one of our untested areas, and also on CMEs, it is a gap. So if I go here on CMEs, it is an unfilled gap. So that would be a simple gap fill. And also a lot of institutional investors, Robert Kiyosaki, one of them calling 24K. So it makes sense in that area. Now we could have a wick below. That is very possible. And I'm going to show you another scenario. But before that happens, so I want to make the last section more long-term analysis. But before, so for now, let me go and talk about the short term. So short term here on Bitcoin, what am I gonna look for? So I want to remove this, so let's do that. All right, so now that can go down. Bye bye. So short term here, we can see we are having a small rejection here after retesting. Now this bounce can play out to our nice level here. We've had a nice retest level that can have here 1, 2, 3, 4. Bitcoin has tested this area here. So if this little bounce here wants to play out a little bit more, it can play out till here, right? And then I expect that to be a rejection point. If a freak event happens, and if the bulls are so strong, right? And if they really want to push through and make this a very good bear trap, you have to see Bitcoin above 35,000. If that happens, I will start questioning, all right, fine, now we're moving back to the top of the range. And if we're breaking back into the range, it's the opposite, right? And if I do, what is it? Control I, Shift I, nope. Uh, Control Alt I, nope. Uh, what is it? There's a way to invert your chart. It's the exact same of how we came down, right? If we're breaking back into the range, there's an 80% chance of filling that range. And after an 80% chance of filling that range, there's that 75% chance of breaking the range. So then the whole story changes. But until that happens, which it doesn't look like it really wants to happen, I don't change my bias of more downside. Now you can see 4-hour Stokes is turned up, but precedented on this move here by the 1 hour closing bearish at resistance here. We can see 1 hour close at bearish at resistance. 1 hour should be down. We can see 1 hour is down. Now, what is interesting is that what I expect to happen is, since we confirmed an hourly high low, I expect us probably to do some sideways action similar to what you saw up here. You know, confirm a high low, bounce up a little bit, come sideways, and then you get the move. And that's pretty much what I expect. You know, range, something like this, confirm high low here, bounce, play out a bit, then get a move. So something like that, boom, and then get your move, right? When does the move happen? Later today, maybe tomorrow. I'm not really too sure, but that's what I'm expecting out of this. Maybe this can even push and test a little bit deeper into here. As I said, the 34K. This is even looking like a nice level up here, 33.8, and maybe a wick around here. And then we move down to the downside. So now let me go into the a bit more long-term analysis and end the video there, and also end the video with something funny, because today is the 22, so that should be a cycle. And I've been looking at these moon phases, they're really funny, and it should be the new moon. So let's just see if that called it. Let's go actually if that called it now. Let's go on this chart, remove drawings, daily time frame, moon phases. Yeah, so some reason this is calling, pumps and dumps, right? It's calling the tops pretty good. So let's see if this calls a continuation top, which it looks like it does. But this told you to sold on, which candle is that? The candle after, when it's confirmed. So this told you to sell on this candle, to be honest. So not the best selling. You would have had to hold nice amount of drawdown. So this is why, but it's good confluence. It does pretty much call where it's gonna roll over. It basically calls the pump into the drop off, right? You can see it calls this pump into the drop off, calls this pump into the drop off. So it's just something interesting. But let's not get distracted by that, and let me show you something very interesting here on my long-term charts. Let's go to a weekly chart here with drawings. We'll bring back drawings. All right, so BLX. Let's bring back drawings, put on log scale. All right, there we go. So there's two scenarios that I could expect to happen here. All right, and it is a possibility. Now, what I can expect, and this is pure speculation, this part, second part is not going to be so much speculation here. Let me check I'm recording. If I'm not recording this time, thank God I'm recording. I'm doing this in about 12 minutes. That's pretty good. So what I can expect here is something like this. This is 2013. Now, we could make history where we make an ultimate bear trap, right? Where we make history here in saying that we break all the technicals, weekly downtrend, which technically we have had a bear market, but a mini bear market, right? And here we did have a mini bear market here in 2013, but the difference was in this mini bear market is we didn't break technicals. We never made a weekly uh, lower low. We never made a weekly lower low, and we respected moving averages, right? And yeah, just a lot of things were being respected here. Let's see how this looks on a daily. So, we were respecting moving averages in 2017. We never made a weekly lower low. And on top of not making a weekly lower low, we basically just V bottomed out of it and range and then continued to the upside. And there was no bearish indicators to say, right? We were never breaking below significant levels and so on, blah, blah, blah. But what could happen this time is we do confirm a mini bear market. Bear market gets confirmed. But what happens here is we do something like this. We have the initial dump, we dump down, and we have this scary cliff dump here. And then at that 24K, or maybe it dips just down for a stint to 22K, we have this huge buying pressure. This huge, huge, huge buying pressure, right? And then once that buying pressure comes in, we spring back where to 30,000, back in our major breakout range. We spring back into this range here. We go back into this whole range here. So it would essentially look something like this. Like we would essentially come like this, and then we get a huge something like this, and then a big wick here. Not at that low. Let me just draw that again. Why is that? No, I don't want this. So let me draw that again. So we come down, boom, we get a scary wick. We get that 22. We get a huge buyback. Looks like another lower high. Bounce back up, come back into the range. And then what do? Then we play that sideways action just like we saw in 2013 where Bitcoin goes sideways for for a couple of months. And how long is it going to go sideways? Because if we do go in a bear market, I do expect us not to go in a very long bear market, and I'm going to show you why here just in a second. Do I want to show you on a weekly time frame or a daily time? Yeah, weekly I'll show you. So then after that, I do expect us to probably, like we did, go sideways, right? I expect us in 2017. Then you get that V bottom, and then you play out that sideways back in the range here for like a month or so, month and a bit, and then we get the move back to the upside. Now, that is speculation. But what isn't speculation is if we do go in bear market, how long do I expect our bear market to last? So if we take out, let's say we'll start from here. I'll show you a few iterations. You can go back and test this yourself. We start from here. Here's your bull market. Boom. How much is this? Around from bottom to top, 44 bars. Now your bear market here is here to bottom is around 50 bars. So about 7 bars less, right? I mean more. So around the same time as your bear market. Now take this instance here from bottom to this top here is about 27 bars. Now your bear market is about how much here? Is about 37 bars. So 10 bars. So you're noticing a mean of 10 bars here, right? So we're seeing, this is a double bubble, so I won't count, but just out of interest, which is not, this is a double bubble, so I won't count. So typically your bear markets here are the same length, are a bit longer than your bull markets, but around the same time. The same time you went up is also the same time you came down, right? So if that was to happen here, and if we take our macro breakout, which I would argue our macro breakout was here at 12,000, to our current positioning here, this is looking like 36 bars. Now, to make a mean, it was averaging from 10 to 7. So let's average that 10 to 7. Let's say about 7.5, an add-on of 7.5. So that means from our macro breakdown, so we had how many bars up again? We had here we had 36. So let's add on about 7.5 from that. So let's go about 35 45, or let's go 44 point something. So 44 point something. So let's just say 46 here, all right? Let's add a nice 10 from top to bottom. That brings us to a date here of February. Now that brings into the whole scheme of low volume summer months, right? That is playing the whole scheme of being in a low volume summer months, and that plays into the whole narrative of saying that Bitcoin ranges, goes in bear market during the summer months, and then when the winter months come and normally volume comes back into the market, even with traditional markets, we see Bitcoin start to take towards the upside and regain itself. So that's making sense into a length, into a length perspective. Now, what's very interesting here is that the length here is not a very long bear market. So if we do go in a bear market, it's just for the rest of the summer. By February 2022 next year, it's looking like you get out, which if you think about it, that's just enough time to accumulate and probably do some stuff. So if we do go in a bear market, I don't think it'll be very long. And if it does become a very, very prolonged bear market, then I start to question, because we've never seen a top like this on Bitcoin. If you look at all macro cycle tops, and if you were to just draw something, right? This doesn't look like a macro cycle top. You normally see a lot more run up. It looks more like this, right? So if I was to draw something like this, right? This is, look at this, and then you come down, and then, and what's very, very, very interesting here is if you accumulate the last bear market, all right? And the last bear market is from here all the way to here, which is 75 bars, right? And normally, so 60 bars, that means that our breakout should be about 60 bars here. So 60 bars means that we should have ended our bull run at about, February, which is also the start when I expect, which is so, because remember we were taking the bear markets and then we were doing it from the bull run. So that means that now I'm taking this, our last bear market, and comparing it to the bull run, because the bull run should be, the bear market should be as long as the bull run. So if you do the opposite here, it is 60 bars, right? So that's doing the opposite, taking away the 10 that was our mean factor. And now if you take away that 10, guess where it lands? February. And if we do our calculation, right? And so we just, let's say we just draw a line here. So that's February calculating the last bear market. So that's how long we should have a prolonged bull market, right? And if I take a line here to mark that in, so if we mark that in like this, and then we take now from our macro breakout, which is from here to here, that is 30 bars. You take 30 bars on the downside here, and remember we had to add about a few bars. That's not the top. So you take it from our macro breakout was 12,000, macro breakout to there 36 bars plus 10 is about 46. So if you're adding 46 from the top here, because that's our mean, and 40, 1, 2, 3, 4, 5, 6, you can see it's pretty much where that line lines up. So both sides it is working. So I do expect, probably if we do go in a bear market, this is just going to be on a macro cycle, look something like this. So we come up here, that's your, you come down, and then we probably continue up. Now how high do we continue up? Well, I do think that six figures, we do have some sort of pause there as a nice classic number. This obviously, that is not a target, but that makes sense. And then it starts to look a lot more like this type of stuff, right? Then we continue the long-term bear market, and then the bear market can come and Bitcoin can accumulate down at probably the 80s and then continue up. Now that's looking a lot more like Bitcoin cycle, because if you look at how long these stints are and then you look how short our current bull run is, it's not looking in proportion, but that doesn't matter about looks, right? Anyways, this is all speculation. I've been talking a while. I'm tired of talking now. And yeah, I'm gonna shut up and take care, guys. Trade sharp, and until next time.